Welcome to a brand new session, and this part is going to be explaining certain things in details, right? And being very specific about some of the adjustments that I have made over the months and within this year alone, right? So previously I've talked about a couple of things from the chat. We've talked about supply and demand. We've talked about the beginner session. We've talked about entries, and I talked about limiting yourself in terms of time frame, right? Which could be good, which is good actually, not could be good, which is good. But this session I'm going to make it much more precise, right? On certain time frames that you should be looking out for, and probably one of the best ways for you to have a look, for you to is it have a look per se, but for you to position yourself, like some of the things you're looking out for precisely. Okay, so without wasting any much time, right, let's just head straight to it. So previously, right, we've talked about supply and demand. I'm going to be making this as quick as possible. Right now, structure is not supposed to be complicated. I've told you guys before. So structure is just supposed to be up, down, up, right, down, up, down. It is this dead simple. So if this is how structure is supposed to be, right, then why do other traders try to make things complicated? Because they tell you that this is structure, right? And then you go to the chart, or whenever they're making the analysis, and then they're telling you, oh, you need to know where the beginning is starting from, where the leg is starting from. You need to know the swing session, so you need to shrink your chart out like this, you know and not zoom in. So there are so many controversies, there are so many things that makes the FX industry, or that makes FX difficult. It's not because it is supposed to be difficult, it is because a lot of our mentors have made these things to be difficult, right? Now, one of the things that I'm going to tell you for free is, anyways, everything is for free here. But one of the major thing is there's no limit to the amount of structures that can form in a particular time frame, right? So we're going to be talking about that later. But then it is just supposed to be the way it is, right? Right. If you zoom into your chart, depending on the time frame, any time frame basically, but this is structure here, this is a break here, this is another break here, right? This is even another break here. Do you understand? This is structure, this is structure. Do you get? This is what I have been showing you guys right from the onset. These tiny structures, always zoom into your charts. There's no need, sincerely speaking, there's no need trying to zoom out to prove any point to anybody. I understand what a lot of them are trying to say, but there's sincerely no need to do that. Just give me a second, my mouse is low. Alright, so structure is supposed to be simple, right? But now you might be wondering, right? You might be looking at my charts at the moment, okay? And then you're wondering why I'm having these levels marked out. Why does it look as if I am also zooming in? No, I'm not zooming in. I still have my recent. This is my recent structure. There is a reason why I'm looking at this, okay? So structure is supposed to be as simple as possible. So it's just supposed to be this one-sided. Okay, this is how it is. No complications. This and this down. Okay, there are zero complications to this thing. know that this is what structure is. Although when we start getting into the charts, I'm going to be showing you guys some type of structures that maybe you've not paid attention to before. Okay, so that you will try to understand some certain things. All right. Now, in the previous course, I also talked about something called inducement, right? Whereby price gives a trap, okay, and then moves, right? Now, there are times that personally, there's a way I trade with inducement. Most times, inducement comes in most times during your internal structure. That's during periods that you want to get into a trade. Okay, but a lot of times when we are looking around, or when we are looking at directions, right, you'll be seeing less inducement. So when you go to your chart, ask yourself, if everybody is telling you that it is all about inducement, it's all about this, it's all about that, it's all about liquidity. The reality is liquidity rests everywhere. There is no sugarcoating to anything, right? There is liquidity at every top, there's liquidity at every bottom, right? So liquidity rests everywhere. So one of the important things, or one of the most important things in FX is your direction. Now, once you know where price is going to, you become less confused. Okay, so this is your regular structure here. This is the type of structures that we have. However, there are certain periods of time, right, that you're going to be seeing structure a little bit more complex, right? In fact, it's going to be more complex than this. That's just the truth. And it's going to be more complex than inducement itself. Okay. Now, there are certain times that, you know, price will be trending upwards. Inducement is simply when you have a trending market already, minimum of two breaks of structure, one, then two, right? And then you want to now have a price now did this. Now you are anticipating a shift, right? Now what happened is price moves, price induces, and then while it gives you a trap to sell, what now happen? There's now an invalidation. Now price comes here and then continues to buy. Okay, so inducement is price giving a trap for people to sell, right, from here. So you're trending upwards like this, you know, this is your trending market. So sometimes you might even have that trend line. You see people saying trend line liquidity, this and that. Please cut the crap. It is dead simple, right? So you might even have your trend line that price is trending upwards, and then you have something like this and it becomes a trap, and you get wiped out like so. So this guy here becomes inducement, an inducement leg, or this right here was a trap basically, right? So this is what inducement is: a false move to lure sellers, right? And then it goes to the upside. So on the, this is on the buy side. On the sell side is just the inverse of this, right? Whereby price is selling and price is supposed to sell from here, but then we get volume, right? Now you see that okay, the trend has shifted, right? You try to buy and excuse me, and then price goes to the downside. Now here becomes, right, here was now an inducement. Okay, yep. So now you have this like this, and price went to clear this, right? Now this is good, it happens, right? But this thing rarely happens. But then there are periods of time that it happens, especially when we are looking at external structures like this. So let's say you are looking, or you are on a high time frame, and then you're just looking at direction, right? And then you're anticipating inducement to happen. The frequency at which inducement is going to be happening on the higher time frame is very, very slim. That is one thing that you should know. So a lot of times you're going to be trading without seeing inducements. Okay, so inducement happens, it happens, but what is the frequency at which it happens? It happens not always, it doesn't happen always, right? So one of the things that you need to know, and one of the ways you want to direct and position yourself is, what is that thing that is frequently happening? You understand? So basically this is inducement. Now what confirms a trend shift is when you basically have two breaks of structure, right? So let's say, let's push this to the side a little bit. So let's say we are trending upwards and then we're having this, right? And then all of a sudden price comes here. What is going to confirm that there is a that the trend has shifted is when we now have a pullback, and then what we have, that second break of structure. Now this is what is confirming that directional shift. So now a reclaim here, and then you try to push price lower, right? Now however, do we have to, the question now is, do we have to always wait to see two breaks of structures before we get into a trade? No, we do not have to do that. We do not have to do that, right? Now there are certain ways that we're going to be learning how to position ourselves, okay, to be able to, you know, get into trades or adequate trades. Do you understand? So we do not have to basically catch all the moves, okay. um we just need to be able to catch good moves and then take whatever it is that we can. Now disclaimer, this is for educational purpose. I'm not telling you to, just strictly follow this without having tested the whole thing and seeing that it works for you, understanding whatever it is that is being taught, right? So this is a simple approach on structure, right? So the next one, we're going to be looking at setting complexities in structure, some of the things that you can see, right, happen. So this is just an example of basic market structure, inducement market structure. Some people call it algo, they call it a lot of things, right? But it is structure, it is what it is. The inducement or the algo type is just price manipulating before the major move, and it is you following a trend, and then whenever you see your first market shift, you anticipate it to be um inducement, right? But then you also, at the same time, you also anticipated that it might not be inducement, because there are times that it will not always be inducement, it will be a trend shift, right? So we are going to be talking about that also, and how to position yourselves. So stay tuned, stay locked in.